Welcome to the deep dive. There's just so much information flying around, especially in areas like crypto. It's overwhelming.
It really is hard to know what to focus on.
Exactly. So today we're trying to cut through that noise. We're doing a deep dive into something pretty cutting edge, an AI-generated 30-day Bitcoin price forecast.
Oh, interesting. From advanced deep learning, right? I saw that. Covers mid-July to mid-August 2025.
That's the one. July 15th to August 14th, 2025. And our mission really is to figure out what this AI prediction actually means for you.
Right, whether you're actively investing or maybe just trying to understand these market forces better.
Or, yeah, just want to stay informed. But
Yeah.
big disclaimer up front.
Huh.
This is a forecast, a reference based on predictive models, not gospel.
Absolutely. Crystal balls are still, well, fuzzy,
Mm-hmm.
especially with crypto.
Okay, so let's unpack it. We've got this AI forecast for the next month. What's the big headline? What's the main story it's telling?
Well, the main story is sideways. The AI is forecasting a generally sideways trend for Bitcoin over this period.
Sideways. So not another massive run-up or crash.
Seems unlikely according to this model. It points towards limited volatility,
Okay.
potential consolidation phases.
Okay, consolidation. And does it give specific price levels for this sideways action?
It does. It projects fluctuations mostly between a high of, let's see, $118,923.83, so just under 119K,
Okay.
and a low of $116,135.81, so roughly a $3,000 range.
And there's a confidence interval on that.
Yeah, an important point. It mentions an approximate plus or minus 5% confidence interval on those projected values. Yeah. So there's wiggle room.
Right, always. And where are we right now compared to that range?
Well, the current price listed in the source, $117,237.42, is actually right near the forecast starting point, pretty much in the middle of that predicted range.
Huh. So it's already kind of behaving as predicted, at least initially. What about day-to-day changes? Any big swings expected within that range?
Not huge swings, no. The expected daily percentage changes are fairly contained, roughly between -2% and plus 1.4%.
So a relatively calm sea is predicted.
That's what the AI suggests, yeah. It feels like a period of relative stability, maybe less reaction to every little bit of news. It actually aligns with some historical patterns we've seen.
What kind of patterns?
Patterns of consolidation that often happen during periods with similar on-chain activity levels. The network metrics seem to support this idea of stability rather than, wild swings.
Okay, that's interesting. So the AI isn't just looking at price charts, it's digging into the blockchain itself.
Exactly. That's where these AI forecasts get really powerful. They
Hmm.
try to connect the dots between price and the underlying network health.
So digging deeper into this 30-day window, does the AI flag any specific moments, potential turning points or levels we should really watch out for?
It does. Here's where it gets a bit more granular. The forecast highlights a few key inflection points.
Like what?
There's an early peak predicted near that $118,900 mark around day one, so right at the start,
Okay, an initial push maybe.
potentially. Then it forecasts a dip, a mid-period trough, down near that $116,100 level around day 9,
Day 9. So about a week and a half in.
roughly, yeah. And after that low, it sees a recovery later in the period, climbing back towards $118,200 or so, around day 28.
So a bit of a U shape or maybe a W shape within that range.
Sort of, yeah. Not a dramatic one, but definite ups and downs within the channel.
And what about support and resistance? Those levels traders are always watching. Where does the AI pencil those in?
Right. So based on the forecast, that low point around $116,000 acts as a pretty critical support level, a floor,
The 116K floor. Got it.
and maybe some intermediate support around $117,000 because the AI notes some bounces happening there in its projections.
Okay. And on the upside, resistance.
The main ceiling seems to be near that forecast high, around $119,000. That's the key resistance. And maybe $118,000 acting as a shorter-term resistance level where price bumps its head a few times.
And you mentioned these are based on specific closing times.
Yes, important detail. These levels represent projected session closing prices at 7 a.m. GMT plus 7.
Which is what time zone roughly for most people?
That aligns with market open times in Asia. So, a pretty active trading time globally.
Okay. So we've got this channel, 116K to 119K, with some predicted dips and recoveries inside it. What kind of pattern does that create overall? And the volatility?
Well, the pattern is definitely what you'd call a ranging pattern, consolidation. The AI mentions the potential for double bottoms near 116K.
Meaning it hits that low, bounces, and tests it again.
Exactly. Often seen as a sign that the support is holding. And then you'll likely see tests of that 119K resistance level. So it's movement within the channel, not really breaking decisively out of it.
And volatility, you said limited overall, but are there spikier moments?
Generally stable, yeah, but with intermittent increases. The forecast flags higher volatility around days 7 to 14.
Which matches that mid-period dip you mentioned.
Right, coincides with the drop towards 116K. And then again, higher volatility expected towards the end, days 25 to 30, during that late period recovery phase.
So mostly calm, but be ready for bumps around the predicted lows and recovery attempts.
That's a good way to put it. It's not flat, just contained with predictable moments of higher activity.
Okay, now you mentioned earlier that the AI connects this to on-chain metrics. Let's get into that. What's happening under the hood on the blockchain that supports this sideways prediction?
Yeah, this is fascinating. It's not just price guesswork. The AI looks at the network's health. For example, the hash rate.
The computing power securing Bitcoin.
Exactly. It's noted as stable and very high, over 900 exahashes per second. That stability suggests miners are confident, they're committed.
And how does that translate to price?
Well, strong miner confidence can act as a kind of fundamental support, potentially underpinning those early period highs the AI predicts. If miners were switching off rigs en masse, that would be a bearish sign.
Makes sense. What else? Transaction volumes?
Also high, around 781,000 transactions. High volume, coupled with price stability like the forecast suggests, can indicate healthy network usage. Not manic, but active.
And maybe buying opportunities during dips.
That's what the analysis suggests, yeah. Increased activity around those mid-period lows could be accumulation. The overall network health, things like network difficulty being high at 126T, that also validates the sideways trend.
How so?
High difficulty means it's tough but profitable to mine. It indicates steady miner participation, which, again, reduces the risk of sudden network shocks that could derail the price. Things are running smoothly, basically.
Okay, so the network itself looks stable, solid. What about things like fees or congestion? Does that play a role?
It does. The forecast notes average transaction fees around $10 and a mempool size, that's the queue of unconfirmed transactions, that's manageable. This suggests network congestion isn't a major issue right now.
Which helps with
Smoother price movements. If the network was totally clogged, it could hinder recoveries or cause panic. Manageable congestion facilitates the kind of stability and gradual recoveries the AI is predicting.
And Bitcoin's dominance in the market, is that a factor here?
Yeah, Bitcoin's dominance is sitting around 63%. That's quite high, signaling stable capital flows into Bitcoin relative to altcoins.
But could that change if Bitcoin just goes sideways?
That's the potential dynamic. The analysis notes that historically, during these kinds of consolidation periods, if Bitcoin stays flat for too long, you can see capital start to rotate into altcoins looking for bigger gains. So dominance could wane a bit.
Interesting. So stable network, but maybe some shifting sands in market dominance if this consolidation drags on.
Precisely. It's a dynamic balance.
Now, beyond the hard data, what about the human element? Sentiment, psychology, does the AI factor that in? How does it see investor mood playing out?
It definitely tries to. The prediction is that market psychology will likely shift from maybe cautious initially to more opportunistic as the price stabilizes within this range.
So people get comfortable with the range.
Potentially, yeah. Early fear during any dips might give way to a more neutral, maybe even slightly bullish sentiment within the range as traders see the support levels holding.
And institutional players versus retail investors. Does the AI see them behaving differently?
It suggests they might. Institutions, it predicts, could be looking to accumulate near those support levels, right 116K. They might use on-chain data, watching whale movements, for example, to position themselves for rebounds.
Strategic buying.
Right, whereas retail sentiment might be a bit more, well, reactive. The forecast suggests potential for panic selling during dips towards that 116K low.
Oh, dear.
But then possibly FOMO-driven buying, fear of missing out, if the price recovers strongly towards 118K or 119K. It mirrors those classic fear and greed index patterns.
So the AI is predicting human nature, basically, reacting to the price swings within its own forecast.
In a way, yes. It's factoring in typical behavioral responses to the price action it's predicting, based on historical data.
Okay, this is a lot to take in. Let's bring it back to the listener. Someone's listening right now, holding Bitcoin, thinking about trading. What are the practical takeaways, the actionable insights based on their style?
Right, the so what? The forecast actually gives specific strategic recommendations tailored to different risk profiles.
Let's start with conservative investors. What's the advice?
For conservative folks, it's mostly about capital preservation. The suggestion is to hold existing positions as long as the price stays above that key $116,000 support level.
Okay, hold above 116K. What about stop losses?
Definitely use them. Maybe set them just below that support, say at $115,500, to limit downside risk if the forecast is wrong. And perhaps limit Bitcoin allocation to maybe 5% of the portfolio during this phase.
Keep exposure low while it's sideways. Makes sense. Anything else for them?
Monitor that hash rate. If it stays stable, it reinforces the forecast's basis. If it starts dropping significantly, that might be a warning sign.
Okay. No, for moderate investors. People willing to take a bit more risk, maybe trade the range.
For them, the strategy shifts towards trying to capture gains within the predicted channel. The advice is to consider entering long positions near the support, around $116,000.
Buying the dip.
Buying the predicted dip, yes. And then look to exit near the resistance, maybe around $118,000 or slightly higher. Using dollar cost averaging throughout the month could also help smooth out entry prices.
And diversification. You mentioned capital potentially rotating to alts.
Exactly. Moderate investors might want to keep an eye on Bitcoin dominance. If it dips below 63%, that could be a signal to diversify some funds into promising altcoins, playing that rotation.
All right. And the aggressive traders, the ones looking for short-term plays.
They have more options, but higher risk, obviously. The forecast suggests they could try scalping, making very short-term trades. Maybe taking short positions during those predicted quick drops towards $116,135, aiming for small, fast profits. Or looking for breakout trades if the price decisively breaks above $119,000, but using tight stop losses.
Playing both the range and potential breakouts.
And exploiting those predicted volatility spikes. During those periods around days 7-14 and 25-30, they might increase position sizes, maybe up to 20% of their trading capital. But again, strict risk management is absolutely crucial.
Okay, lots of different approaches there. Are there any sort of universal entry or exit points recommended across the board?
The general guidance points towards entering near that $116,000 support level. Again, with a clear stop-loss strategy, maybe 2% below entry.
Got it. And exits?
Aiming for exits near the predicted peak, around $118,900, seems logical based on the forecast. And always keeping in mind the 7-polar AM GMT plus 7 session closes for timing.
And position sizing generally.
The broad recommendation is 1.5% of total capital per position, depending on your personal risk tolerance. Using trailing stops is also suggested to lock in profits if the price moves favorably, but then reverses.
Protect your gains. Good advice. Now, how confident is the AI in all this? We talked about the plus minus 5% interval, but does the AI give its own confidence score?
It does, and it varies over the forecast period. Confidence is rated high, about 80% for the short term, like the first week.
Because it's closer, less can change.
Exactly. For the medium term, maybe out to 2 weeks, confidence drops to moderate, around 60%. That's likely due to that potential mid-period volatility.
And for the full 30 days?
Confidence is lower, around 40%. Just more uncertainty builds up over a longer time frame. So the further out the prediction, the more, grains of salt you need.
Right. 40% isn't exactly a slam dunk, and that 5% interval applies across the board.
Yes, that's stated as applying to all the projected price levels. It's the AI acknowledging the inherent fuzziness.
Which brings us to limitations. What could completely derail this forecast? What are the big ifs?
Well, the forecast itself points out a few key things. Unpredictable regulatory changes are always a wild card in crypto. A major crackdown or, conversely, positive legislation could definitely shift things.
Sure. Regulation risk.
Also, big global economic shifts. A recession, a major geopolitical event, something that impacts broader markets, could easily override Bitcoin's internal dynamics.
Makes sense. External shocks.
And crucially, the forecast relies heavily on the assumption that those on-chain metrics we discussed, hash rate, transaction volumes, remain relatively stable. If there's a sudden, unexpected plunge in hash rate, for instance.
Then the foundation of the forecast kind of crumbles.
Exactly. The prediction holds, assuming those fundamentals stay solid. Any significant deviation there could impact the accuracy.
So it's a sophisticated guess, but still a guess based on current data and assumptions holding true.
That's a fair summary. It's data-driven, provides structure, but it's not infallible.
Okay, so stepping back from the specifics of this one forecast, if we connect this to the bigger picture, it makes you think, doesn't it? How does this increasing reliance on AI for market predictions change the game?
That's a huge question. It definitely shifts the landscape. Does it make markets more efficient? Or does it create new kinds of risks if everyone follows the same AI signals?
And what about us humans? What skills become more important? Is it about understanding the AI or maybe focusing on things the AI can't predict, like true black swan events or, I don't know, gut feeling?
Maybe it's a combination. Needing the analytical skills to interpret the AI, but also the intuition and broader context awareness that humans, hopefully, still excel at. It's an evolving dynamic.
Definitely something to chew on. So, to wrap up this deep dive, we've unpacked an AI's view of Bitcoin's next month, predicting a sideways consolidation phase, backed by stable on-chain data, but with specific volatility points and strategies to consider.
Highlighting those key levels, 116K support, 190K resistance, and the different ways you might approach trading or holding within that.
We hope exploring this forecast gives you a framework, maybe some new ways to think about market analysis, whether it's for Bitcoin or other areas you follow. How might you use this kind of structured insight?
Food for thought.
Absolutely. Thanks for joining us for the deep dive.